Welcome to Demore Tax Service, LLC. Listen, I am absolutely thrilled you're here today. We are going to completely demystify something that, let's be honest, causes an unbelievable amount of stress, anxiety, and sleepless nights for so many business owners. I'm talking about the monthly bookkeeping close. If you've ever felt completely overwhelmed by your business finances, or if you just dread the end of the month because your numbers feel, well, totally out of control, you are exactly where you need to be. We are going straight in to the definitive step-by-step masterclass on exactly what it takes to do a full month of bookkeeping using your modern cloud accounting system. Whether you're a business owner doing your own books to save a little cash, or maybe you're a newer bookkeeper wanting to ensure you're delivering top-tier, dead-accurate work, we're going to make this incredibly straightforward. Once you nail this process, man, the sheer relief and peace of mind you'll feel is going to radically transform how you run your business. So let's get into it.
Okay, let's dive into this. Here is our roadmap for today. We're taking a really structured, linear walkthrough that perfectly mirrors the actual software workflow you'll be using. It's 5 parts: starting the monthly close, mastering the bank feed, reconciling your accounts, reviewing financial reports, and finally, finalizing the books.
Now, if that 5-part agenda sounds even a little bit intimidating, I want you to just take a deep breath. This whole potentially daunting task, it's really just a simple, highly logical 3-step workflow at its core. Step 1, you categorize your data to actually give it meaning. Step 2, you reconcile that data against reality to ensure it's mathematically accurate. And Step 3, you review the final output to gain invaluable business insights. That is the magic formula right there. Categorize, reconcile, review. Mastering these 3 fundamental steps is exactly what gives you total financial clarity, empowering you to step confidently into your role as a business leader.
All right, let's kick off our chronological journey right at the very beginning, with Phase 1, starting the monthly close.
So before you can even think about doing any actual accounting or coding work, you absolutely have to verify your raw data. Our primary goal right out of the gate is to ensure that literally all of your bank and credit card transactions have successfully pulled into your accounting system. Think about it. If your raw data hasn't synced properly from all your different accounts, you are essentially flying blind. For instance, say your credit card connection drops, right? And it misses a full week of really heavy expenses. Any profit analysis you try to do after that is going to be fundamentally flawed. You might look at the numbers, think you had a highly profitable month, make a huge purchasing decision based on that, and then boom, you realize later the cash simply isn't there. We have to mathematically verify the data is present first before doing anything else.
Once we know the raw data has securely arrived, we transition into the actual coding process, which brings us to Phase 2, mastering the bank feed.
And this brilliantly illustrates a crucial distinction you absolutely must understand if you want to keep your books clean and accurate. Look at the critical difference here between categorizing and matching. When you hit categorize, you are assigning a brand new category or a new bucket to a raw expense that just came in. But when you match, you are explicitly linking that raw expense to a transaction you've already recorded in the system manually, like, say, a physical check you wrote 2 weeks earlier. Getting this simple toggle right is how you actively avoid duplicating your expenses in your ledger. Think about it. If you categorize a check you already manually entered instead of matching it, you literally just doubled your expense for that single item. This artificially lowers your profit, it completely messes up your tax liability, and paints a totally false picture of your financial health. Understanding this one little concept, it saves businesses thousands of dollars in mistakes.
As you categorize, I want you to listen to this expert industry secret regarding best practices. Always, and I mean always, have a vendor or a customer name for any expense or any income. Taking the extra few seconds to add specific vendor names, like typing in your landlord's name for rent or your internet provider for utilities, translates directly into vastly superior financial tracking down the road. Look, I know it might be tempting to just gloss over this step because you're in a hurry, you just want the task done, right? We've all been there. But by consistently adding these names, you empower yourself to pull reports later that show exactly how much you spent with a specific vendor over the entire year. That lets you negotiate better rates or effortlessly spot unwanted subscription creep. It's a game changer.
So keeping that in mind, here are your essential pro tips while you're working inside the bank feed. Yes, your accounting software definitely tries to be helpful by offering auto-suggestions based on your past behavior, but you must be proactive and always review them. The software is simply guessing based on algorithms, and trust me, it can absolutely guess incorrectly. Second, as we just talked about, add specific vendors to every single line. And crucially, keep your eyes peeled for sole proprietors or single-member LLCs you might be paying for services. If you identify them right now and request their W-9 immediately, you can flag them for future 1099 tracking. Let me tell you, chasing down contractors for W-9s in the middle of January when taxes are due is a massive, stressful headache. By doing this proactively every single month, you keep yourself perfectly compliant and totally stress-free at year-end.
0. This right here is your magic number. I want you to really visualize the relief of reaching exactly 0 pending transactions across all your checking, savings, and credit card feeds. It is the definitive milestone that tells you this entire first step is officially complete. You want a completely clear board before you move on to the next phase.
With a totally clear bank feed, we confidently move right into the second major phase, reconciling your accounts.
This is where we mathematically prove that the data we just meticulously entered perfectly matches physical reality. To begin this process, you are going to need your actual physical or digital bank statement right in front of you. But hey, do not let a 20-page document intimidate you. You strictly need to pull exactly 2 specific pieces of information from it to start your reconciliation: the statement ending date and the statement ending balance. And I've got a huge tip here that trips up countless business owners. Make sure you are looking at the actual statement ending date, not the bill's payment due date. These are almost always very different. For example, your credit card billing cycle might cut off on the 15th, but the payment isn't actually due until the 1st of the next month. You must reconcile to the 15th. Using the wrong date virtually guarantees your reconciliation will fail.
Now, what's really interesting about this slide is just how much modern software has completely revolutionized this specific process. The old school method meant printing out your massive paper statement, getting a bright yellow highlighter, and literally going line by line, checking off every single transaction manually against your written ledger. I mean, it took hours. But the new school way, because you have already accurately pulled in and categorized everything via the bank feed, the system essentially bulk checks all that feed data against the ending balance for your specific date range automatically. If your bank feed is completely clear and accurate, modern reconciliation is incredibly fast. We're talking just a few clicks.
However, please do not let that incredible speed make you complacent. As any top-tier financial professional will aggressively warn you, you do not want to wait too long. 6 months of transactions could get really messy and be an absolute nightmare to sniff out. Establishing this reconciliation process as a strict, non-negotiable monthly habit prevents an overwhelming mountain of work later. If you have an error buried in 6 months' worth of compounded, tangled data, it is going to be incredibly difficult to locate. Untangling those forensic accounting errors, it costs a fortune in professional fees and completely drains your energy. Do it monthly, for sure.
Speaking of errors, let's talk about basic troubleshooting for a second. If your reconciliation is off by a few dollars or cents, do not panic and definitely do not get frustrated. The absolute first thing you should do is simply double-check that you typed the ending balance correctly when you started. A simple human typo is the culprit a shocking amount of the time. Specifically, you want to look out for transposition errors, like accidentally typing $45 when the statement actually said $54. That simple swap of 2 numbers on your keyboard is literally the #1 cause of reconciliation headaches. So don't waste an hour hunting for a ghost transaction when you just made a simple typo.
So think about where we are. The bank feed is at 0, and the reconciliation screen says your accounts perfectly match your statements down to the penny. So, is the bookkeeper's job done now? Can we just pack up and go home? Well, not quite. This is where we smoothly transition away from raw data entry and dive into the vital, high-value analysis phase.
That brings us to Phase 4, reviewing financial reports. This is the moment where we zoom out from the individual day-to-day transaction level to look at the massive macro picture of the business's overall health.
So, the crucial point is understanding exactly what a bookkeeper's review actually entails at this stage. Listen, you aren't doing deep, complex financial forecasting here. It's a high-level, critical scan of your profit and loss statement and your balance sheet. You are actively hunting for miscategorized items, entirely unexpected accounts the system might have accidentally created, or funds awkwardly sitting in buckets labeled uncategorized or miscellaneous. And let's be very clear about why that matters. Miscellaneous is a dangerous dumping ground. It is essentially a black hole for your money. It provides zero actual insight into your business health, it prevents you from making informed budget cuts, and it immediately raises massive red flags during tax season or an audit. Every single dollar needs a proper home.
And the great news is, you don't have to do this entirely on your own. Modern accounting platforms provide incredible built-in checklists specifically designed to catch any of these loose ends before you officially close the books. The software will automatically scan your ledger for transactions missing payees, it flags potential personal transactions that absolutely shouldn't be mixed with business funds, it spots unapplied payments that could be completely throwing off your accounts receivable, and it even warns you about any secondary accounts you might have simply forgotten to reconcile. You definitely want to use these powerful tools to ensure pristine accuracy.
Now that the review is pristine and your reports are totally spotless, we're ready to lead into the concluding section of our session today. It is time for Phase 5, finalizing the books.
Let's move to and see how this builds up to the finish line. The monthly close is officially complete when you can confidently check off these 3 vital achievements. 1. Your bank feed is completely clear with 0 pending transactions. 2. Your account reconciliations are mathematically matched to your actual statements perfectly. And 3. Your high-level reports look clean, logical, and fully accurate after a thorough review. When those 3 things happen, you have officially closed the month.
Look, if you are currently doing this manually, maybe struggling to keep up with the sheer volume of transactions, or you're just looking to massively upgrade your business's overall financial health, we have a fantastic resource for you. You can visit demamoretaxservice.com today to learn exactly how our dedicated team can help you implement this precise, structured workflow. We can completely remove the stress and anxiety of the monthly close from your shoulders forever, letting you get back to what you do best.
Ultimately, the goal of doing this every single month isn't just about simple tax compliance. The real transformational power is in the data itself. Think about it. With clean, beautifully structured, and accurate monthly books, what new financial insights will you discover about your business? When you truly trust your numbers, you unlock the power to make radically better business decisions and scale with immense confidence. Thank you for listening to Let's Talk Taxes podcast.